Temitope Olugule is a member of the economic think tank and financial derivatives company. And I'm asking her if she's going to join the stock exchange on July 6th for the 6 o'clock in the morning corporate challenge.
Okay,
that's just putting you in the line of fire there. But again, I think often it falls on a Saturday, so it's always a weekend. So and so you don't have to be. We don't have to be scared about whether it's going to fall on a work day. So it's a weekend, usually a weekend. So the rules are free, and we can be part of that. So we need to juggle a number of things on the commodity side. So there's a bit of a challenge right now for crude prices being squeezed by geopolitical tensions between Washington and Beijing, isn't it?
Yeah.
Oil prices now below $70 a barrel, still down this morning, and it looks like it's not over yet. Even the EIA, the Energy Information Agency, had reviewed that's a bit of a comfort in terms of the EIA review to 69, a little bit above 69 from 62, but all these permutations still below a 70. How comfortable is Nigeria within this burning economic issues from the world of oil?
Okay, so to the oil market, so we are now below 70, which was to be expected with the tensions between the US and China, and you know, it's just the aftermath of President Trump's tweet. But like you said, the good news there is that despite these tensions, the EIA is still revising its 2019 price forecast to upwards to $69 per barrel. So that's good news. The report from the agency was that they're seeing beyond the tensions. They're looking beyond the short-term tensions of the US and Beijing, and they're looking to market fundamentals, basically, to supply constraints. So we still have the sanctions on US sanctions on Iran, US sanctions on Venezuela. There's still the shortage from Libya, yes, due to the political tensions. So all of that is what played into EIA's review upwards. So it's more long-term. So basically the short-term tensions, they're looking beyond that. And so we're still in a comfortable zone. Slightly comfortable.
Yes. Whatever happens there, it comes down for Nigeria into external reserves, into the state of the Naira.
Yes.
But it looks like our external reserves is a little bit up.
Yes.
Naira seems is a bit firm on the dollar, and it looks like the interventions by the central bank is getting a little bit more stronger, up a little bit.
Yes, so those are some of our burning issues. So we have the external reserves is up marginally to about $44.8 billion, and we also have that following the temporary blip in exchange rates. So exchange rates depreciated marginally on Monday to 361 Naira per dollar, but we're back to our 360 Naira per dollar rate. And we also have that the CBN. So what we've noticed from the CBN's exchange rate management technique is that they went from an aggressive OMO intervention, and now we're seeing a shift back to the forex intervention. So in May alone, they've intervened over $400 million basically. So yes, we've seen that shift, and that may not be unconnected with the fact that, you know, when they reduced this MPR, the impact of the reduction in MPR may have been slightly undermined by their aggressive OMO intervention. So that may be the reason why they're shifting back to the CBN to intervening in the forex market. So they are going from a demand management to a supply management.
Yeah, demand management, suppress treasury yield rates.
Yes.
Don't let it go significantly higher. Yesterday I saw 9.9% on some treasuries maturing in June.
Yes.
And that was quite massive. So try to keep the lead on that on one hand. Hit the guys on fixed income market. Fixed income market with massive treasury transactions, PMA, OMO, and then now back to the FX, looking at, okay, this is the demand side. How do we intervene more in the smaller, medium enterprises at the low level? Now that this looks like they try to keep the FX, the fixed income market a bit stable.
Yes, yes. So that's basically what they're doing to, you know, to still have to still basically stay on their contractionary side of things, but also manage the exchange rate. So we're seeing that shift to supply management, and as long as the exchange rate stays stable, I mean, we're fine with either way.
The currency, the exchange rate, the price
is very important.
The price is in sharp focus at all times.
Yes.
But let's go back a bit to the global marketplace and spend a few minutes with the agri-commodities market. Oil prices still bouncing around the barrel, as it were. Gold is making some gains from this melting ice cream of stock market and oil prices and all of that. So where do we have the agri-commodities in this power play, or for oil, for geopolitics, North Korea, Iran, nuclear, whatever story?
Okay, so we've taken the oil market side of things. We have it still below, we have it now below $70 per barrel, and we're now slowly reaching our benchmark. So our benchmark is $60 per barrel, but we're still a long way from our benchmark, but it's just something to watch and hopefully not fall to our benchmark or below our benchmark. Now, to the agri-commodities, it's a mixed bag. So basically, Nigeria's main imports and export commodities, we have a mixed bag of it. So we have 3 reds. So we have the wheat, corn, and cocoa, which is our export commodity. They are red. So the prices of wheat and corn have gone up, and the price of cocoa has come down. But on the side of sugar, our import commodity, we have that green. So our prices of sugar are going down. And if we now switch to the domestic commodity side of things, we have that. One thing we've noticed of recent is that the price of a carton of Indomie has gone up, and that after
kids are back in school.
After staying stable for at least a good year or so, we have that back up, and that may not be unconnected again with the increase in wheat and the global price of wheat. So that has gone up.
I got that. We need to keep that in mind.
Yeah, so something to watch.
Thank you very much. It's good to have you here on Tuesday and again on Thursday. A member of the research team of Financial Derivatives Company.